The Eurozone's under tremendous stress. Our assumption is the ECB will have to be doing more, possibly with IMF support, to support these debt markets. What it's telling us about 6 to 12 months out is that we're going to be in quite a deflationary environment in Europe for a long time, with low yields and low returns on government bonds in what are perceived to be the safe havens, which I would argue would then encourage investors over the medium to long term to be looking at where the yields are much, much higher, which is including much of Africa.
Sure. Now, where in Africa are those yields high, and where is the opportunity in your perspective? And we're talking broadly across all asset classes here.
What we're seeing is in Kenya, interest rates have gone up to 16.5%. There's an awful lot of interest in bonds at the short end. I would think that assuming inflation stabilizes and comes down, that's going to be even more attractive at the long end. In Nigeria, we've also had the central bank take measures and hike interest rates, yields of roughly 15%. That looks great compared to the 2% you get in the US on 10-year debt.
Yeah. I want to take you back to Kenya, particularly given the policy flip-flops we've seen coming out of the central bank in Kenya. Does that not unnerve investors and perhaps think in terms of Africa, oh, you can never be too certain about the policy environment?
Every emerging market goes through teething problems, whether that's the United States in the 19th century or whether that's a lot of countries now. What's important for investors today is that they have seen 950 basis points of rate hikes in 2 months, less than 2 months out of Kenya. So there's trust. Well, whether there's trust or not, the return is now attractive enough to make this
for the risky investor come in and try and take some of those assets. What about here in South Africa? I mean, we've seen the political temperature rising. Today we have the issue of the Julius Malema hearing, and then of course we know that next year it's going to be the 100th year of the ANC in existence, but it's also an elective conference where leadership is likely to change and perhaps policy likely to change.
The big picture here is that we think China will be easing policy over the next month or two, probably in November. When that happens, South Africa is going to be one of the beneficiaries of this. As money comes back to emerging markets, South Africa is the perfect proxy for emerging market risk. Now, at one level that's bad. Every time things go wrong, South Africa gets whacked. But every time things look a little bit more optimistic, the Rand and other South African assets do quite well. So equity investors have been prioritizing South Africa as a defensive play recently. They might go for it as a resources play soon. The currency, we think, comes back a little way. Not back to the 6.6 to the dollar levels.
What's your forecast?
We've got 7.5 within the next few months. We think European banks are now deleveraging. And European banks are going to be offering less cash to the emerging market world than they were just 6 months ago. And the consequence of that is going to be there's less appreciation pressure in the short term on the currencies.
Yeah. So the outlook for the South African Rand looks better. What about the Nigerian and Naira? Because we've seen also the Naira coming under pressure. Yeah.
That's a fantastic question. I was in Lagos last week trying to get an answer to that.
Yeah.
Our base case is that it's stable around the 155 to 160 level. Are there risks to that? Yes, there are. And actually there's big questions long term about what would be suitable for Nigeria. If they attract in massive investment into their power industry, for example, into their energy sector, the currency could be going to 120. If they decide that they need to benefit exporters, manufacturers, the currency could be going much weaker. As East Asia has shown over the last 20, 30 years, that can be a good developmental model. At the moment, my sense is they want to stick with stability. But that can obviously change. There's no guarantees on this one.
And between the asset classes themselves, what are you looking at? Where do you see the most opportunity between equities and bonds?
It depends on the country a lot. 2-year horizon, 1-year horizon, I think disinflation is the name of the game. The global economy is weak. It could get weaker. Bonds are going to have been doing well, should continue to do quite well. 1 to 2 years out, I still don't see how America gets out of its problems without trying to create some more inflation on a more sustained basis. And US yields of 2%, and therefore bonds in general, might suffer.
Did I hear you say that Africa is the opportunity?
Africa we see as one of the best opportunities in the world today.